Hello guys! Today, we're diving into the latest updates on Chinese EV stocks and the broader market trends that are shaping the industry. If you've been following the electric vehicle space, you know it's been a turbulent ride, especially for Chinese equities. However, recent developments suggest that brighter days could be ahead. From central bank interventions to government stimulus efforts, the wheels of recovery are starting to turn. Stick around as we break down the key highlights, analyze market movements, and explore what this all means for investors like you. Yesterday, I was monitoring the market, and it was noticeable that most Chinese EV stocks ended the day in the green. However, there was one exception: Li Auto, which finished in the red. Naturally, this wasn't encouraging for shareholders. On the other hand, NIO managed to close the day with a nearly 1% gain. The slight rally we witnessed across Chinese equities was largely driven by China's central bank injecting liquidity into the financial system. For a while now, Chinese stocks have faced significant challenges, with short sellers targeting them persistently. This has kept valuations suppressed, leaving investors concerned. The recent financial stimulus from China's government, however, is paving the way for recovery, instilling some optimism in the market. An article published by Benzinga highlighted the boost in U.S.-listed Chinese stocks, attributing it to strong trade data, central bank intervention, and a Goldman Sachs projection of 20% growth. As a result, companies like NIO and other Chinese EV manufacturers such as Xpeng experienced a positive day in trading. Hopefully, this marks the beginning of a sustained recovery for these equities. A quick look at the Hong Kong Stock Exchange reveals that it rose by 1%, with Xpeng climbing 3.3% and Li Auto gaining a modest 0.35%. Xpeng, in particular, continues to perform well thanks to its robust delivery figures. Investors seem to appreciate the brand's achievements. However, it's important to note that Xpeng primarily sells lower-cost EVs. For instance, the revenue generated by NIO's premium models like the ES8, ET7, and EC7 often requires Xpeng to sell twice as many vehicles to match that figure. This underscores the distinction between the two brands' market positioning and business strategies, a factor investors should consider when comparing the two. Meanwhile, ONVO is still in the process of ramping up its production capacity. Once they hit the target of manufacturing 20,000 vehicles monthly, we can expect significant improvements in delivery numbers. This milestone will undoubtedly be a game changer for the company. Bloomberg recently reported that the People's Bank of China has injected cash into the system, reinforcing expectations that economic growth is imminent. Although the massive stimulus package announced in October of last year has yet to fully deliver tangible results, Bloomberg has suggested that it's only a matter of time before we see its impact. Patience seems to be key here, as those who endure the current market turbulence and take advantage of low share prices will likely reap substantial rewards in the long term. China's government has extended EV subsidies through the end of this year, further supporting the industry's growth. This move, along with anticipated interest rate cuts, will make it easier for consumers to purchase vehicles. This will benefit manufacturers like NIO, Xpeng, ONVO, and even newer players like Zeekr. Increased consumer spending on EVs will help stimulate China's economy, driving growth in the automotive sector and beyond. While we haven't yet witnessed the full benefits of China's stimulus efforts, signs of progress are emerging. Articles from credible sources like Bloomberg and Benzinga affirm that meaningful changes are underway. These reports reinforce the notion that China's economic policies are starting to take shape and will soon yield results, especially for key sectors like electric vehicles. For investors, the question remains, will you position yourself to benefit from this potential turnaround in Chinese equities, or will you stay on the sidelines, waiting for visible results before making your move? The choice ultimately determines whether you're part of this opportunity or merely an observer of the recovery. With promising indicators and strong government support, it's an exciting time to watch how these developments unfold. Blue skies may indeed be on the horizon for Chinese EV manufacturers like NIO and others. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.